Hello traders, Steve Ganz here with another trade concept and idea that I want to share with people so that they can kind of model this, test it, do it in a paper mode, of course, until you understand exactly what this trade is and how it works. So let me give you the premise and the setup on this trade, and this is going to be another start to finish trade. So, but this is going to be a longer term trade. So let me share the premise with you behind this trade and my thinking on it, and then we'll get into the why I'm doing it the way I'm doing it. So this is a trade on FedEx. As you recall, FedEx had earnings here not too long ago. FedEx tanked pretty heavily during earnings. This trade probably would have been maybe a little bit better to put on a few days ago, shortly after that earnings announcement and that drop. But the premise here is that I like FedEx long term. That FedEx has pulled back into what I would consider to be kind of a support range here in this general, 240 range or so. And at the end of the day, I would be interested in owning FedEx at 240. That's a key premise here, is that I have to have the funds set aside and be willing to own FedEx at 240. So assuming that's the case, assuming that I am ready, willing, and able to own FedEx at 240, of course, a logical thing is I could just go out and sell a put. But then if FedEx rips back up here to 280, 290, whatever, I'm going to make a little bit of money on that put. I'll, of course, get to keep the premium that I sold that put for, but I won't really participate in this run up in FedEx beyond the selling of that put. So the trade I'm going to show you, this is a trade that I learned years ago. The gentleman that taught it to me, he called it a breakout for free. I don't know that I totally like that wording, and the reason I'm not sure I like that wording is it's not really free. You do have risk here. Your risk is, in this case, if FedEx were to plummet significantly, I will have to take FedEx, and of course it won't be free at that point. I will have to pay a fair amount. But again, my premise, I'm going out to July. I'm giving FedEx time to recover. And if I wanted to, I'm going to remove this. If I wanted to just buy a long call, then I could participate in as much of the upside as there is. However, I'm going to spend $1,500 or $1,700 for that one long call, which means that I really won't be able to take profit in FedEx. It won't become profitable until I get above this, roughly 278 range, somewhere in there. So, well, that's not very good. I mean, it could happen, but that means that if I just buy a long call, I'm underwater all the way up to around this general area here. This isn't working for me until I get almost to the old highs. So if I want to be able to partake in that maybe a little sooner, I could fund the purchase of this long call by selling some puts. Now, I could just sell a single put, but I'm going to sell two puts, but I'm going to sell them much further away. So let's just take a look at this and include this again. So I'm selling these puts all the way down here at 230. Again, if FedEx were to fall back all the way here to 230, I'm a buyer, okay? That is a place that I would really like to own FedEx. So knowing that I am a buyer at that point, I'm going to sell two of these, and I'm selling two of them for $8.90 each. Let's call it $9. So that's going to be $1,800 I'm going to take in, roughly. And then I'm going to use that $1,800 and I'm going to buy this one call for $17.80 or $1,780. That gives me a net profit here of about zero, maybe, as the pricing bounces around here a little bit, might go up a little bit, might go down a little bit. But bottom line is I am paying for this long call, and I'm paying for that long call by selling these two puts. Now, if FedEx goes back up to 280, I'm up $1,900 in this trade. if FedEx drops anywhere in here all the way down to 230 at expiration, I won't have any risk in the trade. However, we have to look at what's going to happen in the meantime. If I were to get into this trade and FedEx were to tank in the next couple of days down to, say, 240, well, my P&L is going to look like I'm down $1,200. Well, it's not going to look like. I will be down $1,200 in P&L. But I have to understand and recognize that as we get closer to expiration, as time ticks off, if FedEx does not go much lower, my T0 line is going to take this configuration, and by expiration date, unless I am below 230, I'm essentially back to, call it break even for all practical purposes. But in the interim, this could get very, very painful. So again, I have to have the conviction that I am okay and willing to buy FedEx at 230. So long as I have that conviction, I don't really care what happens here in the meantime. If it sells off, yep, that's certainly going to look like some pain, and it will be some pain. But again, I was willing to buy FedEx at 230 anyway, and ultimately, if I end up down here, that's what's going to happen to me. So, but my overall premise here is that I feel that FedEx is likely to go back higher from here, and I have to understand that. If FedEx chops sideways for the next 4 or 5 months in this 250 range, of course, nothing's really going to happen. My P&L isn't, I'll basically be break even on the trade. So that is the, again, what was taught to me as a breakout for free. Again, I don't totally consider it a breakout for free because I am taking on downside risk here. I mean, it's a breakout for free at expiration, so long as FedEx doesn't go below 230. I guess it could be true in that scenario. And I could also point out that if we come and we look at the build trades, this is very similar to what is called a long combo. However, in the long combo, they're essentially doing 1-for-1. They're selling one put, buying one call. The challenge with that is those have to be spread much, much further apart at that point because you're not getting enough money selling just a single put to be able to buy a call close to the money. So that's a viable strategy if you're expecting an explosive upside move on something. Then maybe you could sell a single put and buy a single call. That single call would be much further out of the money. But if you're expecting a truly explosive move in something, maybe that's okay. In my case, I'm not really thinking there's going to be an explosive move. I'm just thinking FedEx is going to grind back higher. And as a result of that, again, I'm okay selling this down here. And of course, as always, the nice thing about optionstrat is I can come in here and I can play with this and say, what if I don't think it's going to go below 240? Well, if I don't think it's going to go below 240, I could set this at 240. Then I got a guaranteed winner at 625 if we stay in here. Or maybe I want my run-up to start at 250. So I could even, again, play with this a multitude of different ways. But I'm going to go at this the way I'd originally set it up, which is a 230, 260. And I'm going to go ahead, I'm going to save this trade. I will copy this into the link below, and feel free to load this into your own platform so that you can watch it and learn from it. Again, all trades should be in paper. And please like, subscribe, give me any comments that you might want in there as well, and I'll work to respond to those. Thanks so much, everyone. Take care, and we're approaching the new year. This will probably be my last posting until next year, 2024. So everyone have a happy and safe new year. Take care.